Welcome back to the Discovering Commercial Real Estate podcast. Our guest today is a partner and director of originations at WeLend, Suleymanov. Solomon, thanks again for coming on. I really appreciate it.
Thanks for having me, man.
Of course. So can you walk us through your journey in commercial real estate? How did you get to this point today?
Absolutely. So it's a great question. I started back in 2010. I got a call from my cousin Ruben, and he's like, I have this job for you, cold calling people for loan modifications on their properties. At that time, I had no idea what a loan modification was. I've never done cold calling before. I was fresh out of high school. So I was like, all right, and I was looking for a job. I'm like, all right, let's do it. I came in, worked for a few months, was getting a lot of no's. I maybe had closed one deal. And then I came out to him like, hey, I don't think this is for me right now. And, I think I'm done for now. So he's like, all right, think about it. Let me know what you want to do. And at that time, my mom was also kind of pushing me to go into pharmacy school. So I was like, you know what, let me try it out. Maybe I'll become a pharmacist. So I was working at a pharmacy for about a year. Didn't like that either. Then got another call from Ruben in 2013. He's like, listen, we're going on our own now. Let me know if you want to join, and let's see what we can do. So I was like, all right, you know what? Let me give this another shot. Let me see if I like it, and maybe some things have changed. Jumped on, cold calling once again. He helped me out there a lot, walked me through it, helped me with my pitch and the whole nine. So I was able to overcome that, I guess that fear of cold calling. And I got to the point where I was, door knocking at people's homes in Bushwick, Bed-Stuy, and trying to see if they want to sell their homes. That was a very interesting time in my life. And in 2014, 2015, we started buying up a decent amount of real estate. Brooklyn, Queens, the Bronx, Staten Island as well. So we were fixing, flipping, developing, wholesaling deals as well. And in 2018, we decided to open up WeLend. And to date, we funded a little north of $500 million in loans across various asset classes, but majority of 1 to 4s and multifamily type properties. So
awesome, great. Yeah. And what do you think is it about the debt business that kind of attracts you and keeps you going?
That is a good question. I like being on the debt side a little bit more than on the acquisition side, because you're able to literally see what your borrowers are doing, like maybe your competition back in the day, and see how they think and how they operate and how they play their moves and how their chessboard just goes around. I really love and I enjoy seeing that. And there are a few borrowers that I speak to directly all the time, and I'm like, hey, what are your thoughts on the market? What are your thoughts on these areas? And I just like, we just have some nice conversations and understand where the markets are going, and just picking their brain is great. So that's probably my favorite side on the debt side, is where we're able to see exactly how these deals play out and how they're able to get these deals. And I know, everyone thinks that real estate has all these glitz and glamours, but there's a lot of back end work where it's like, you're putting in a lot of work, a lot of time, a lot of effort, and it's really not that sexy, as they say. So
got it. Okay. Yeah. And what do you think you'd be doing career-wise if not commercial real estate? If Ruben didn't make that phone call?
If I was not doing commercial real estate, I'd most likely be in tech right now. As a kid, all my family members would always reach out to me and be like, hey, we need some help for our computer, our phone, whatever the case is. So I was that kid in the family where everyone reached out to me with their tech problems. So I definitely would be in tech. I actually went to Pace University for computer science. I dropped out and ended up in real estate. So
awesome. Yeah. That's great. And can you talk us through some of the benefits associated with working with a private lender like WeLend?
That is a very good question. Absolutely. So, I mean, working with private lenders, I think, is very important. The most important part, I feel like, working with a private lender is building that relationship with the lender, right? When things go wrong, things go south in the market, you want to make sure that you have a reliable lender by your side. And for us, that's one of the most important things, right? Having that customer service, being able to be there for our borrowers whenever they're in need. And we were able to prove that in during the pandemic when we were still lending. We did stop lending for about a period of like 2 to 4 weeks, but then we got back on track. So I think that's one of the most important things working with a lender. I mean, look, it all truly comes down to service. Every lender offers the same exact thing, right? But private lender offers the same thing, but it truly comes down to service and who you're working with, how you're working with. Speed for us is another huge component, right? We're able to close deals anywhere from like 7 to 14 business days.
Great.
I would say like what it was like last month, I had a borrower reach out to me and say, hey, I have a TOE, I have a time of the essence on another deal, and I need to close as soon as possible. It was a mixed use property in Brooklyn. Reached out to Barry Evaluations. Shout out Barry, you guys are amazing. Reached out to them. They got me an appraisal back literally within 24 hours
Oh, wow.
on a mixed use property. And we were at the closing table within 72 hours.
That's
so within
amazing.
3 days.
That's great.
Yeah.
And let's say somebody wants to acquire an asset, but they have no experience. How does WeLend kind of work with them to make it happen?
So we love working with first-time borrowers. There are a few asset classes that we tell them to, I don't want to say shy away from, but I would say wait until you gain some experience and then enter into them. Generally speaking, if it's your first time fixing and flipping, we'd say, hey, you probably want to get into a deal where it's like a 1 to a 4 unit, residential type property where you're going to fix and flip. Generally speaking, we have them put like 30% down. But yeah, we handhold throughout the whole entire process because we understand this is their first transaction.
Right.
They have no idea how most of the stuff works. So we handhold from A to Z. So from contract all the way to closing.
Okay, great.
Yeah.
And what are some of those asset classes that you tell borrowers to avoid?
Definitely would say avoid anything commercial related, retail related,
Hotels?
multifamily, hotels, motels, definitely ground up. Right, definitely ground up. So that's another huge one where I have so many people reaching out and they're like, hey, I have this beautiful ground up deal. The numbers pencil out, the numbers make sense. I'm like, this looks amazing, but you have no experience, right? So like you want to gain some experience fixing and flipping and rehabbing properties, and then get into ground ups. But what we do also have them do is sometimes they partner up with some investors that have more experience than them, so they don't pass up on the deal, and we're able to fund their deals that way as well. So.
Okay, got it. Understood. Okay. And Solomon, we talked before this about how real estate is not just a game about the asset and the numbers, it's also a game about personalities and people.
Yeah.
So how do you go about managing personalities and people and kind of bringing them to the closing table?
There's a lot of personalities in real estate. I learned that the hard way. Before when I just got in, I'm like, all right, it's just all about the numbers. It's just all about the deals. And then when I started dealing with people, and I think real estate is probably is the number one business where you deal with the most people, right? Because you have, of course, the seller, you have the buyer, you have the attorneys on both sides, you have the closing agent, and you have title. So there's so many components. I try to be as neutral as possible, not take anyone's side, and just try to get the deals to the closing table. There are definitely times where your emotions get the best of you, but I try to keep it cool as much as possible. And I mean, listen, real estate, especially on the private lending side, it's very fast paced. So you want to make sure that the deal is done properly. Majority of the times our borrowers come to us with a TOE, the time of the essence. They need to close yesterday. There might be some cloud on title, whatever the case is. So we try to be neutral as possible and just try to get the deal closed.
Got it.
Yeah.
Okay, understood. And I want to know about States Capital. What gap is filled in the market by this company? And are there any creative strategies that you employ to outperform the market with this fund?
So States Capital is the debt fund. It's pretty much like a subsidiary of WeLend. So that's where we raise our capital for the fund. A very interesting question that you just asked as well. How are you outperforming the market? I'm glad that you brought that up because we recently just launched a new program. It's the foreclosure bailout rescue loans.
Oh, okay.
So we're seeing right now in the market, we're seeing a lot of investors not being able to get takeout loans on a lot of their properties for obvious reasons, right? Because the rates are going up, deals are just not penciling out. The debt service ratios are just a lot lower than what they projected it to be. Maybe they ran out of capital to complete the project. So what we're doing today is we're coming in and we're giving them rescue capital, and being able to take them out from their current lenders, give them a brand new fresh loan, allow them to reposition their asset, either trade it or be able to refinance out, without accruing in default interest, without them being able, without them losing their property
Mm.
to foreclosure. So that's one great way right now that we are, we're juicing up the returns for our investors in the fund, is through that rescue bailout program.
Okay, awesome. And how do you so what's the target return for the fund?
So on the foreclosure bailout rescue side, so the target return there right now that's a good question. I think it's like around 18 or 19%.
And how do you kind of manage the risk associated with such a risky or high return?
Yeah, I mean, we're definitely, it's no lie, right? We're lending on risky borrowers, right? But the most important thing to us is that, hey, the asset's good, right? So right now we're working on a deal in Hudson Yards. It's 22 resi and 2 commercial. Of course we want to understand the story behind the borrower, like what exactly happened with the deal. Why are you in default with your current lender? Like, what's going on, right? If it's a valid reason as to why, we'll have no issue with moving forward with the deal. But if it's like a borrower that says, hey, I decided to just stop making payments because it was COVID, and now I want to get this thing wrapped up, we're kind of going to be iffy about it. But to go back to that Hudson Yards deal, we're lending up to 65% of the as is value. We also want to make sure that the borrowers has enough skin in the game. We're also looking at the after repair value of the property, the upside, and just making sure that everything clicks. But again, the asset class that we're really looking at there are multifamily, mixed use, and we'll also take a look at resi to 1 to 4s.
Okay, awesome. And for somebody who wants to kind of invest in real estate, what's the difference on their end between investing in a private equity fund or a private debt fund or just buying assets outright?
I think that really depends on what returns they're looking for. If you're looking for juiced up returns, I think you always would want to go and buy on your own, because generally speaking, the ROIs that we're seeing from our borrowers today, I would say, is ranging from like 40 to 50% on their money.
Right.
So if you're looking to make 50% on your money, I would definitely say go out there and buy your own deals. The equity side, I think generally speaking, the equity side has a higher return than the debt side. But of course, you're the most secure on the debt side.
Of course, yeah.
So Ruben always has this one story that we always say. We had a deal in the Bronx. It was a 2-family home that we purchased to fix and flip, and at the end of the day, what happened there was we lost about $50,000 or $60,000 on that deal, and our lender made his 14%. And we paid him off, and he made his money and we lost, and we're like, damn, the lender at the end of the day always gets paid, and they always get their way. So that's why I always say, like, the debt side is always more secure than the equity side. And guys, also, like, if you're going to be getting into real estate, don't ever think that every single deal is going to be a winner. There's always going to be something that's going to pop up where it's going to be tight. You might lose some money, but that should definitely not slow you down. You should definitely learn from those types of deals and see what mistakes you've made and progress and learn from them. So that's huge.
Awesome. Great. And I want to talk about location. So your primary focus is on the East Coast.
Yeah.
Could you kind of describe your thought process behind this?
So the thought process behind that is we're New York City based guys. So like prior to getting into lending, we were fixing, flipping, and developing. So New York City is our backyard. So we know the market, through and through, right? So that was the biggest reason as to why we were, the Northeast type of lenders. We also understand the Jersey market as well. We've purchased some properties out there as well. Massachusetts market, we fully understand. Connecticut as well. But now we're also venturing down into Florida. I mean, who is not, right?
New York Six Borough.
Yeah, exactly. New York Six. Where I heard that on like on an Instagram post. I'm like, wow, that's genius. I like that one. Yeah, it means we're also venturing down in Florida, but the real reason is because we're New York City based, so closer to home. And that's where we really understand the markets. But we still lend nationwide. So we still have some deals that we funded in Texas. I think the most where was the recent state? I think in Alaska. No, I'm sorry,
Mm.
Hawaii.
Oh wow.
We funded a deal in Hawaii. Yeah, it was interesting. I literally went on Google Maps to take a look at the property. I'm like, wow,
Wow, that's great.
this is life in Hawaii. Yeah.
Interesting. And can you tell us about the first deal that you worked on as an investor?
Sure. The first deal I worked on as an investor was actually that deal that we lost some money on in the Bronx. Took it from A to Z. Actually, no, that was not the first deal. There was another deal that I did in the Bronx. So it was actually we didn't close on it. We flipped our contract. So we entered into contract with the seller. And at that time, we really didn't have a lot of money. So when you don't have much money, you're like, all right, the next best thing before flipping is going to be wholesaling, right? So found the deal, got in contact with the seller. She liked who we were, entered into contract. Few weeks later, reached out to a couple players in the industry, and we flipped our contract to them, and that was probably the quickest deal I saw.
Awesome.
It was great. And then I had a couple of more like that in Brooklyn and in Queens. But on the fix and flip side, there were a few good ones. There was a really good one that we had in Brooklyn. It was like, I think it was like a 4-family. It's a really nice deal.
And can you tell us about a deal that kind of you thought would be a layup, but it ended up not being a layup?
Oh, absolutely.
Ended up being a problem.
Absolutely. That deal that we were just talking about on Bruner Avenue in the Bronx.
Okay.
I believe we purchased that one for like $450, and we put in about like $70,000 into construction. Then there was a whole slew of problems. I think we had problems with either the foundation or something in the basement. And then we ended up selling it at a $50,000 loss. So that one was our after repair value there was, I believe, like it was like $650 or like $700 at that time. The numbers might be a bit off, but we were like, all right, this deal's a layup, quick touch up. Don't have to do a gut renovation in there, fix up the property, and it came out to be a complete bust.
Got it.
So yeah, that was one of the few. I think that might actually be the only one that we lost money on.
Okay, got it.
Yeah.
And if you were dropped into a random market, let's say in Wyoming, how would you go about kind of becoming a market leader and learning the market from day one?
Very good question. How would I become a market leader and learn from the market? So the first thing I would do is I would probably reach out to all the real estate brokers within that market and try to get an understanding as to, what deals are selling for, what deals they might have in their pipeline. But two, I think the best way for you to find and create your own deals, well, for you to find the best deals, have the highest ROI is creating your own deals, right? That is going to require you to literally, go on to whatever state that you're focusing in on, pull up all their pre-foreclosure type properties or other types of leads within that area. Generally speaking, pre-foreclosure properties that have like missing owners. Also, driving around within neighborhoods and seeing what homes look like they're in distress. Maybe reaching out to those people as well. And literally try, generate that into an Excel, get their phone numbers, mailing, right? Send them out mailers, and literally go door knocking within that area, and speak to people and realtors and brokers, and try to get a feel for those people. I think in real estate, I think your number one thing truly is marketing, right? You need to market every single second. I think what Bob Knakkel says is it's not who you know, it's who knows you.
Right.
And I love that. That sticks with me. When I heard, I'm like, wow, he is so right. It's like, who knows you? So I know I have a few borrowers that literally, what they're doing is they're mining for data within those specific areas, whether it be pre-foreclosure, missing owners, and also, building relationships with brokers. I think a lot of investors really not shy away, but they what's the word I'm looking for? They really don't appreciate that relationship with these agents, right? These real estate brokers, because a lot of these brokers generally have really good deals as well. When these investors come and they start negotiating maybe 1 or 2% off their commission, it's like shooting yourself in the foot,
Right.
right? It's like like they're like, all right, next time I have a deal, I'm definitely not reaching out to this
Mm.
person. So I think it's huge building those relationships. But the biggest thing, in my opinion, is creating your own leads
Mm.
and reaching out to them.
And as far as creating that relationship, do you think it's important to kind of sacrifice short-term profit and kind of leave some meat on the bone for the person that you're doing business with to kind of create that long-term outlook?
Absolutely, without a doubt. It's a long term play, right? In real estate, you're here for the long term play,
Mm.
right? You're not here for the short term. So
Right.
I think if you're doing anything in real estate, it's always looking at it long term.
Got it.
Yeah.
Okay. And when you're buying an asset, how do you bring a seller with insane pricing expectations back down to earth?
Ooh, that resonates in today's market a lot. That's a good one. It's tough, man, because if you have a seller today in today's market, if they refied out, like 2 years ago at a 3% rate, there's really no way to incentivize them to move out,
Right.
right? Well, I'll keep it real. That's why I always tell my borrowers and people seeking advice. I say, hey, how can I find deals and I can get it done quick? You always want to focus on people that are looking to really sell, right? Like have a fire sale, whether they be in pre-foreclosure, whether they're moving to a different state, different country, whatever the case may be, whether it be a probate. Those are generally the easiest ways
Mm.
for you to be able to negotiate with the sellers. In today's market, it's so tough. I feel like there's no way to really incentivize them, because if you're under 3% mortgage today, you're looking at homes for sale, prices really haven't gone
Right.
down much.
Right.
And today's rate, I think the rate today is like over 7%.
Yeah.
So it's tough.
Right.
It's definitely tough.
And with this kind of market environment, what would you recommend for someone that just graduated college to get into? Should they get into brokerage, lending, acquisitions? What should they do? Where do you see the opportunity?
I think, in my opinion, I think initially, if you have no experience in real estate, right, you definitely want to get onto the brokerage side,
Mm.
right? You want to be an agent for a little bit. You want to understand how the whole entire process works, right? You want to see, hey, you want to be a rental agent. You want to see how that process works, how you deal with tenants. And then after that, you become a seller's agent or buyer's agent. You understand how that process works.
Mm.
And then from there, because when you're a seller's agent, right, what are you really doing, right? You're comping out these properties, you're saying, hey, this probably can sell for X, Y, and Z. I can get the deal done at that rate. And you're still negotiating, right? So you're also building your negotiating skills. You're also building your sales skills, right? Because you really need that. And especially when you're going on the acquisition side, you really need sales skills. So I would suggest starting off as an agent and then becoming a wholesaler, right? Wholesaling some deals, and then becoming a full-blown real estate investor. I think starting from the bottom and just growing yourself up
Working your
is
way up.
huge. Yeah,
Got it.
exactly.
Okay, great. And as far as the sales skills, how long did it take for you to kind of really get it and be able to understand psychology and understand what exactly is going on?
To this day, I'm still learning.
Okay.
To this day, I'm still learning on the sales side, without a doubt. And I feel like, a person that doesn't grow on a daily basis stops growing completely.
Mm.
And no one really knows everything. So it definitely took me about, I would want to say, 4 to 5 years to really understand the psychology part, to really understand how to speak to people and digest their information, what they would want to hear, rebuttals, etc. Right? There are some courses that I actually took. I'm sure you know who this person is, Jordan
Belfort?
Belfort.
Yeah.
He had a few really good courses. I mean, listen, at the end of the day, he's a salesperson.
Right.
He really knows how to speak to people. He's really good. And when I just got into the industry in 2013, YouTube was like there was no videos on real estate on
Right.
YouTube at all, zero. I was like trying to, Google stuff. There's like nothing popping up. So I was trying to figure it out on my own. I would always go to my brother Moses or Ruben and try to get some ideas as to how I should pitch, what I should pitch. Their thing was I was always aggressive
Okay.
on the phone, so I kind of calmed down on that side. And in today's day and age, dude, you literally go on YouTube and there's so many videos out there for you to really learn how to be good in sales and what rebuttals you can use, etc. So technology is a beautiful thing today.
Understood.
Yeah.
Okay. And what do you think kept you going after, let's say you faced a week of rejection? What like kind of got you to restart that same thing the next Monday? In other words, what was your why?
Well, at that time, I dropped out of college, and I'm like, I know nothing else other than real estate. I always had my brother and Ruben always pushing me.
Got it.
So I think it's very important having someone there always cheering you on. And, when you want to quit, they're there like, dude, you should not quit. You should keep going and pushing forward. So I think that's really important. So that was my why.
Okay.
And at the end of the day, I understood that real estate had money in it. I'm like, all right, there has to be a way I can figure this out.
Right.
So that was another big reason.
Okay, understood. And Solomon, I want to ask about AI. So you have a background in tech and a background in computer science. How do you see AI kind of changing real estate, and how do you see technology and real estate mixing in the next, let's say, 2-3 decades?
So it's funny you mentioned that because we just updated our website and we added ChatGPT into the chatbot. So that's one way of adding. I mean, I don't know if you can consider that AI, but now like we literally programmed ChatGPT to be able to spit out answers and like questions, whatever the case may be, for like real estate investors, brokers. So that's one huge way. Another way I really see AI and real estate coming together is on the transaction side. And we've seen a few of those already, not us personally, but in the industry where, blockchain was used for selling and purchasing. So that's one huge way I feel like it's going to be used. And that's going to be like your title and deed, right, to a property, where that can never be altered or erased. And also I feel like, canvassing and finding, real estate investments, I think that's gonna be a huge, huge one as well. So, we might have, there's some of our borrowers have analysts that work and look at spreadsheets all day. I feel like I don't want to say will be obsolete, but I feel like there's gonna be a lot less of those.
Got it.
In the coming years.
Got it. Okay.
Yeah.
And let's say somebody wants to get into prop tech out of college. Do you think now is a good time, or are we late? How does real estate adapt with technology? Is it slow or fast?
I think real estate adapting to technology is super slow. So I think now is still a perfect time to get in,
Early
without
stages?
a doubt. Yeah. Yeah. But I mean, look, again, what we were saying earlier, right? It's like real estate is probably the most human interactive business out today. Right. And it's really tough to disrupt it. I know a few players that tried doing it. It's hard.
Got it.
It's hard to break through, but I feel like now is a perfect time to get in.
Awesome. Great.
Without a doubt.
Okay. And when you envision your retirement, what does that look like for you?
It's funny you mentioned that. I was actually speaking to a couple of my friends last week. I definitely probably would. How there are days where you just work, and you're like, all right, I want to relax, and you get home and you're relaxing. You're like, all right,
I want to work.
This is it. I need to get back to work. But the way I see myself retiring is most likely having like an acquisitions team on the side. I'm thinking about like moving to Europe.
Awesome.
Retiring out in Europe on a nice yacht, a nice home.
Sick.
Yeah. But definitely always sticking to real estate. Now, anytime like I'm on vacation in Europe, I always go online and I try to find like, what are the properties going for? Like, are there any distressed homes within the areas? Like, what niche can you find within those markets to take advantage of? But yeah, that would be my plan.
Okay, great.
Yeah.
And what would you say drives you nowadays? Is it money, personal achievement, family, or philanthropy, or a mix of all four?
I would say a mixture of the four, but definitely family is
Mm.
huge. I'm not married yet, still single, but I know when, once that comes,
You're gonna give it your all.
huge obligation. Yeah. But yeah, I mean, listen, I love real estate. I love what I do. There are days where it's really tough and you're like, all right, I want out. But overall, I love it.
Awesome. That's
Yeah.
great. And I have my final question to wrap this up, Solomon. What advice would you give to your 22-year-old self?
What advice would I give to my 22-year self? I probably would say go to school for finance.
Okay.
And probably, yeah, and still stick to real estate. But definitely get my finance degree.
Awesome.
Yeah.
Great. Okay, Solomon, thanks so much. This has been great.
Awesome.
Super
Thanks for having
valuable.
me. Appreciate it.
Great.